Good morning, traders. Welcome to an overview of the S&P 500 futures via the Ichimoku charting system. Now, we can see that price was observing this blue line, which is 26 periods of the high and low. It dropped down through, used the cloud as support, came back up to the blue line, and unfortunately with some bad economic news regarding the non-farm payroll, we've dropped back down again. It's interesting to note that the golden cross on the S&P 500 index happened in there, and the golden cross on the Dow Jones index happened in there. So we've been in a very volatile times, and prices reflected that, hence the long candles. Now, interesting to note that this brown line, which was using the candles as support, and I expected this red line and blue line to act as support at 913, didn't hold. Price did drop right back down, and we now have price in the cloud. We've got a small candle there representing Japan's open market this morning, because they trade 6 days a week. They use the 26 periods because that represents a month. They use 9 because it represents a week and a half. 6 plus 3 is one of the theories as to why 9 and 26 are important numbers, and we see that they carry through to many indicators of today. Now, we see that the cloud here has crossed. While it hasn't completely crossed, I'd like to now see that this price comes back up here, and we'll see recurring through different things that the price level of 922 is very important. If we can now get price to come back above 922, this red line come back up through, we have a strong buying signal, and then we can go chasing a new high. This brown line will hit resistance now at 912 and 916. we can only hope that we get a nice rally and that we can punch back up through here. Unfortunately, it is now a case of waiting and watching to see which direction the S&P 500 is going to do after the initial bad news of the non-farm payrolls. I'll just bring this in so that we see that the cloud has continued to stay bear on the weekly cloud, and this is the cloud that I'm talking about punching into. This is not my trading platform. Charting, I unfortunately can't bring that up. I probably can actually on the video. I can do it. I'll try to do it a bit later because it is a lot closer. It is just absolutely skimming this cloud, and this red line is now much closer. Now we've got this red line at the 915 mark. So as I said, that 915, 916 is a very important number. If we can rally and get back above that, we can use that as support. We've been using it as support. Unfortunately, on the fundamental bad news, they use that as a as a cause to be able to drop. We see that we've got the brown line has managed to get through the candles and now above this red line, and that we're now using it as support. So that really gives us sort of 870 as a bit of a line. We have to watch out in here where there's a dip where 845 becomes available. We are looking at a weekly chart, so these numbers do represent the wider range. Now the cloud, if I can bring that back up, we can see that the cloud now is just sitting there at 934 for the, no, actually this is the new candle, so we have cloud sitting at 947 via this charting package. On my other one, it's sitting at around 939. What I would be looking for is for price to come back above this red line and using it as support, trading at a tight range, and eventually breaking into this cloud. Via this cloud we have 1087 as a target, but because we've got a lagged brown line here, which is 26 periods back on closed price, we see that we have resistance sitting at that 1023 mark. Yes, it can peek through it, but it doesn't like closing over it. This brown line during a live market does jump all around representing the price, but it is based on closed price. That gives us, now otherwise, if price drops down, we have strong support at 811. Now if we need to use that, we need to use that, but it's not like we're going back to the 666 we have support. That is the important part. We've got two lines of support. We've got one sitting here at the 877 and one sitting back here at the 813. Ideally, I'd like us to see price get it back above the 915. Since we're going for a complete overview, we will move into the monthly chart, and the monthly chart shows a different story. The monthly chart shows that we've done this breakout during the 2008. As I say, I don't like it to break out without my red line as the gatekeeper to the clouds, and it's done what I call a false breakout. It has now rallied back up to greet this red line coming out of the cloud. Now the bears would like to say, well, great, now it's been greeted, now it can do a run. Yes, it can, but blue line has now got out of the cloud. It's sitting at 1,020, 1,120. I find that once the blue line gets out of the cloud, it's a strong magnet for price, and this area here is being represented by the weekly cloud. If we can break into the weekly cloud, I feel that we're able to then get up to the blue line. Once we get up to that blue line, well, then we have to have a look at where the world is at and see whether we're going to continue into this bear formation and travel back down again. But this line here where we have a flat blue and a flat green in the future, that is a strong attractive for the price, hence why I'm trying to move into the move through that cloud. If we don't, well, then the bears are going to take control and we will watch another drop testing the support on the weeklies. Now I've moved into a quarterly chart. We see that we've continued, it's still running as a bull cloud, while this blue line, which is an average of the red and the blue lines, and the green, which is 52 periods, high low, and we see we're based now on this low and this high. So this range and these flat lines will continue for quite a while unless we have a new low or a new high. These lines will all tend to then become flat in around this area. Look how all four of my lines are sitting around this 1,115. So I've got many targets in this range. Now again, I don't like price to break through clouds without this red line. We have a breakthrough and now we're hitting resistance at this 921 mark, and you can see these little whiskers that are popping up through here. I would like to see price to come back up here, red to greet it, and then we can attempt to go back into bull trending. That is my cause for being a bit bullish. This is a false breakout. If I was trading this on a 4x chart, small time frame, I would not be entering into a short. I would be looking for price to come back up here and get back to this red line. That is on the quarterly chart. If we come back down into a tighter time frame, a 30-minute, we see the big dropout caused by the news. We see that price respected this red line, it then came across, met the blue line, then it's done a big drop. Okay, that could be how it could happen on the monthly chart. And we see that we've now just been in this ranging little period, and price is currently in a bear trending mode, but no new lows are being created. We keep creating higher lows. That gives me encouragement, and I hope you found that interesting. Thank you.